The Aroon Indicator is a technical analysis tool developed by Tushar Chande in 1995. This indicator was designed to identify trend changes and strength in financial markets. It helps traders determine whether a security is trending or in a consolidation phase and can signal potential reversals in price direction. The Aroon indicator consists of two lines, Aroon Up and Aroon Down, both plotted on a scale from 0 to 100. Unlike many oscillators that focus on price movements, the Aroon indicator uniquely focuses on time rather than price. Specifically, Aroon measures the time since the highest high for the Aroon Up line and the time since the lowest low for the Aroon Down line within a specified period, typically 14 or 25 days. The Aroon indicator consists of two main components, Aroon Up and Aroon Down. Aroon Up measures the number of periods since the highest high within the look-back period, typically 25 days. Aroon Down measures the number of periods since the lowest low within the same look-back period. Both Aroon Up and Aroon Down values are converted to percentages between 0 and 100. When Aroon Up is high, above 70, and Aroon Down is low, below 30, an uptrend is likely in progress. Conversely, when Aroon Down is high and Aroon Up is low, a downtrend may be occurring. Now we'll learn how to calculate the Aroon indicator. The Aroon indicator consists of two components, Aroon Up and Aroon Down. The formula for Aroon Up takes the number of periods since the highest price in the last 25 periods, subtracts it from 25, divides by 25, and multiplies by 100. Similarly, Aroon Down uses the number of periods since the lowest price in the last 25 periods. The key input for these calculations is how many periods have passed since the highest and lowest prices occurred within the look-back period. Let's walk through an example calculation. Consider this 25-day price chart. We need to identify when the highest and lowest prices occurred. In this example, the highest price occurred 5 days ago, and the lowest price occurred 10 days ago. Let's calculate the Aroon Up value. We take 25 minus 5, which is 20, then divide by 25 to get 0.8, and multiply by 100 to get 80. For Aroon Down, we take 25 minus 10, which is 15, then divide by 25 to get 0.6, and multiply by 100 to get 60. These values can now be plotted on the Aroon indicator chart, which ranges from 0 to 100. Our Aroon Up value of 80 indicates that the highest price occurred relatively recently within our 25-period window, while our Aroon Down value of 60 shows that the lowest price is somewhat recent, but not as recent as the high. These calculations tell us how recent the highest and lowest prices are within our specified period. A higher Aroon Up value means the high price occurred more recently. Similarly, a higher Aroon Down value indicates a more recent low. Values closer to 0 indicate that the price extremes occurred longer ago in the look-back period. While the standard look-back period is 25, traders can adjust this value based on their specific needs and timeframes. Aroon values range from 0 to 100 and provide important insights into market momentum and trend strength. The Aroon indicator scale ranges from 0 to 100, with different zones indicating various market conditions. A value of 100 indicates that a new high or low occurred in the most recent period, suggesting strong momentum in the direction of the trend. Values above 70 generally indicate a strong trend is present, as the high or low occurred relatively recently. Values between 30 and 70 suggest consolidation or weak trends, as the high or low occurred somewhat recently. Values below 30 indicate that the high or low occurred a while ago, suggesting weakening momentum in that direction. The relationship between Aroon Up and Aroon Down is crucial for interpretation. When Aroon Up is high and Aroon Down is low, it indicates a strong uptrend. Conversely, when Aroon Down is high and Aroon Up is low, it indicates a strong downtrend. Crossovers between Aroon Up and Aroon Down often signal potential trend changes or trading opportunities. To summarize, Aroon values provide key insights about market momentum and trend strength. The Aroon indicator is a powerful tool for identifying trends in the market. A strong uptrend is indicated when Aroon Up stays above 70, while Aroon Down remains below 30. Conversely, a strong downtrend is signaled when Aroon Down stays above 70, while Aroon Up remains below 30. When both indicators move sideways and remain between 30 and 70, the market is likely in a consolidation phase with no clear trend. Traders look for sustained separation between the two lines to confirm trend strength and direction. Trading signals from Aroon crossovers provide key insights for market participants. A bullish signal occurs when Aroon Up crosses above Aroon Down, suggesting a potential uptrend beginning. At this crossover point, traders identify a potential buying opportunity as momentum shifts from bearish to bullish. Conversely, a bearish signal forms when Aroon Down crosses above Aroon Up, indicating a possible downtrend starting. This crossover signals a potential selling opportunity as momentum shifts from bullish to bearish. The strength of these trading signals increases significantly when crossovers occur at extreme values. Crossovers above the 70 level or below the 30 level are considered particularly strong signals for potential trend reversals. Traders often use these crossovers as entry or exit points in their trading strategies. For best results, it's recommended to confirm Aroon crossover signals with other technical indicators or price action patterns before making trading decisions. When both Aroon Up and Aroon Down move in parallel or close together, it indicates a consolidation phase. During consolidation, both indicators typically fluctuate between 30 and 70, moving together with minimal divergence. This parallel movement suggests that neither buyers nor sellers have control of the market. The price is essentially range-bound. Consolidation phases often precede significant breakouts. Traders watch for subsequent divergence between the two lines. This divergence may signal the end of consolidation and the beginning of a new trend, as one indicator rises above 70 while the other falls below 30. Remember that the transition from parallel movement to divergence is a key pattern to watch for when using the Aroon indicator. The Aroon indicator differs from other momentum oscillators like RSI or MACD in a fundamental way. While most momentum oscillators focus on price changes, Aroon's primary focus is on time. Let's compare how Aroon, RSI, and MACD differ in their approach to market analysis. Aroon measures how long it has been since a high or low occurred, focusing on the time element of price movement. RSI, or Relative Strength Index, measures the speed and magnitude of price movements, identifying overbought and oversold conditions. MACD, or Moving Average Convergence Divergence, focuses on the relationship between moving averages of price, highlighting momentum shifts. Now let's see how these indicators behave differently on the same price chart. Aroon up and down lines track the time since the most recent high and low. Notice how they remain at the extremes when a strong trend begins. RSI reacts more quickly to price changes, making it sensitive to short-term volatility and sometimes generating false signals during strong trends. MACD follows the trend, but often with some lag, as it's based on moving averages of price. Let's summarize the key advantages of Aroon compared to other momentum oscillators. Aroon's focus on time, rather than price magnitude, gives it unique characteristics. It's particularly effective at identifying the beginning of new trends. Aroon provides clearer signals during consolidation periods and is less affected by short-term price volatility compared to other oscillators. This makes Aroon a valuable complement to price-based oscillators in a comprehensive technical analysis toolkit. The Aroon indicator, while valuable, has several limitations traders should be aware of. First, it can generate false signals in highly volatile or choppy markets, leading to potential trading errors. Second, the standard 25-period setting may need adjustment based on the security and time frame being analyzed. Third, Aroon works best in trending markets and may be less effective during prolonged sideways movements. Here we can see an example of false signals in a volatile market. Notice how the Aroon indicator generates misleading crossovers during this choppy price action. To maximize effectiveness, traders should follow these best practices when using the Aroon indicator. First, use Aroon as part of a comprehensive strategy rather than in isolation. Second, confirm Aroon signals with other technical indicators to increase the probability of successful trades. Third, always consider the broader market context and fundamental factors affecting the security. This chart demonstrates how combining Aroon with other indicators, like moving averages and volume, can provide stronger confirmation of potential trend reversals. Let's review the key takeaways for effectively using the Aroon indicator. Remember that Aroon works best in trending markets, where it can effectively identify the strength and changes in trends. Always validate Aroon signals with other technical tools to avoid false signals and improve trading results. And finally, consider adjusting the default period settings based on your trading time frame and the specific characteristics of the security.